The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone. My name is Andreas Thalassinos, and I would like to welcome you all to today's webinar titled Trading the Alligator Strategy. Let's go through the agenda for today. We're going to discuss, of course, the alligator anatomy, the parts that make up what is known as the alligator system. Of course, bullish and bearish divergent bars as defined by Dr. Bill Williams, angulation to confirm or filter, if you like, the bearish and bullish divergent bars, and the awesome oscillator, the compass to the market, as Dr. Bill Williams describes this oscillator. Fractals, very important part of this strategy. I'm sure that you heard about that. Fractals, I will explain in every detail, and I will show you how to identify buy and sell opportunities as a contrarian, in a contrarian fashion, if you like, to go against the trend when the trend, of course, is trading at extreme areas. And then I will show you the more reliable breakout buy and sell opportunities. And I will show you different ways how to take your profit. And then I will describe what happens when the alligator is sleeping and when the alligator is hungry. And that is going to be a lot of fun, of course, and very informative. And throughout the webinar, of course, you can place your questions and I will try to answer them as fast as possible. So let's get started. The alligator looks like that. It has three lines. By default, the green line corresponds to the lips of the alligator, the lips. Don't forget that Dr. Bill Williams comes from Austin, Texas, where there are a lot of swamps and as a result, a lot of alligators. That's why the naming of the strategy. So lips corresponds to the green line here. It's a moving average, of course. The teeth correspond to the red line. By default, the teeth come in red color, the red line, and the jaw is the blue line. So these are the major parts of the alligator mouth: the lips, the green line, the teeth, the red line, and the jaw is the blue line. So let's go into more detail and describe the different parts. Lips is, of course, a smooth moving average of 5 periods with an offset of 3 periods into the future. Offset means to project forward into the future the prices. And that, of course, will be very helpful, as we will describe in a while. So lips is just a smooth moving average, 5 periods, and offset 3 periods ahead or into the future, if you like. Then we have to go through the teeth, and the teeth is the red line. It's a smooth moving average of 8 periods and with an offset of 5 periods ahead into the future. Let me pause for a while here and explain what offset actually looks like. Do you see here on my presentation slide? Guys, please just type yes if you can hear me well. Type yes if you can see my presentation so I get some feedback. Now that is the beginning of our presentation. Type yes if you can hear me and see my presentation. Excellent. Thank you, guys. Thank you so much. So, do you see here at the end of the price chart, the last candlestick? It's a green candlestick, right? But actually, the moving average should correspond, should stop, if you like, at the last candlestick. But instead, in this case, we see that the moving averages extend to the right, they are projected into the future because of the offset. This is what it means. Okay, guys? So this is what the offset does. This is what the offset creates, this projection into the future. So as I said, the red line, the teeth, is an 8 moving average with an offset of 5 periods. And the jaw, the blue line, is a 13 smooth moving average with an offset of 8 periods into the future. And this is what actually the alligator looks like. Now, let's move, if you don't have any questions, to another very important part of the strategy, which is the bullish divergent bar. Bullish divergent bar, we might say that it looks like a hammer if you are familiar with candlesticks. Let's say it looks like a hammer, but in alligator terminology and strategy and system, Bill Williams uses bars, not candlesticks, okay? That's why you will hear the word bar very often. It's not candlesticks. But on my presentation, I use candlesticks as well because nowadays traders are more familiar with the candlesticks. Nevertheless, I will explain using the bar. So bullish divergent bar, it's a lower low. It shows a lower low. Your candlestick, your bar, if you like, has a lower low compared to the previous candlestick or bar. And it closes at the top half of the bar, of the candlestick. And it's out of the alligator's mouth. Of course, the bullish divergent bar looks like that. You see, there is a lower low compared to the previous low, and the closing price, because on a bar the tick to the right corresponds to the closing price, it's above the midpoint of the bar. And of course, the last condition is that this bullish divergent bar is out of the mouth of the alligator. All right? So let's go further. And of course, the meaning behind this bullish divergent bar is that the bears were in control in the beginning of the bar. That's why you see these prices going lower, even lower than the previous candlestick of bar, because actually the bar opened here at this specific tick to the left, then it recorded all these lower prices, then these prices were rejected because the bulls ran in and pulled, if you like, the prices higher above the midpoint of the this bar. Okay, so this is the meaning behind that. So then we have the bearish divergent bar. It shows a higher high. It closes in the lower half of the bar, and it's again out of the alligator's mouth. It's very dangerous to find yourself in the alligator's mouth, guys, right? That's why this is a very important condition. The bullish and the bearish divergent bars have to be out of the mouth of the alligator. Very good. It looks like that. Do you see the higher high here? The high of this current bar is higher than the previous bar. And then it closes right here below the midpoint of the bar. And of course, again, very important that this bearish divergent bar is out of the mouth. So let's try and identify these bars on our chart. Look at that, bearish divergent bar. Do you see this bar here where it has a higher high? Do you see that? The high of this bar is higher than the previous one, and then the close of this bar is below the midpoint of the bar. And this is a very nice example, of course, of a bearish divergent bar. Let's take a look at that. Is that a valid bearish divergent bar? Of course, there is a higher high as you compare this high with the previous high. The closing price, if you can see right here, is below the midpoint of the bar, but is it out of the alligator's mouth? No, it's not. So this is not a valid bearish divergent bar because it's located in the mouth of the alligator. Okay, very good. And a bullish divergent bar, as you see here, it's a beautiful bullish divergent bar. Lower low, don't forget this condition. This low is lower than the previous one, and the closing price is above the midpoint of the bar. Is it out of the mouth? Of course it's out of the mouth. So this is a valid bullish divergent bar. Let's take a look at another example. What about this one? Lower low is in place. So you see this low is lower than the previous one, and the closing price is above the midpoint of the bar. But is it out of the mouth? No, it's not out of the mouth. So you cannot consider this bar as a valid bullish divergent bar. Okay, I have a question here. Is the mouth same as the jaw? Okay, look at that. The mouth consists of the lips, the teeth, and the jaw. So all three together make up what is called the mouth. But if your bullish or bearish divergent bar touch any of these three lines, then you can say that you are in the mouth. Okay? Clear? Very good. So, you see, in this case, it doesn't touch the blue line, but rather it exceeded the green line. Okay, but it's not a valid one. Very good. Now, there is another term that Dr. Bill Williams mentions when he discusses bullish and bearish divergent bars. He says that to have a good or valid bearish or bullish divergent, there must be an angulation. And this is a little bit difficult term to explain, but I will make it very easy for you guys. Okay, look at that. The way Dr. Bill Williams explained it is that you find the interconnection of all these three lines, and then you draw a straight line that goes through these three lines. You see, this line goes through the three lines. And then you draw another line, another straight line that starts from the same starting point, but goes all the way to the bar, in this case, the bearish divergent bar. If this angle here is big enough, it's a visual inspection, guys. There's no hard rule about that. Then it's considered enough of angulation to qualify this bar here as a bearish divergence. But I understand that I have to repeat it a few times, most probably, so you can grasp the idea. So I will explain it in a better way. Look, guys, if there is a big white area, in my case, the background is white. In your case, might be sometimes a different color of background. It might be black. But nevertheless, if there is a lot of space between the bearish divergent bar here and the lips, like in this case, so you see there's a lot of empty space, then this bearish divergent bar qualifies as a bearish divergent bar. I think I have a few more questions. How do you open a trade, and what numeral number do you state at top, at stop loss, and take profit, and when to close it? Yes, I will come to that. Allow me to finish with the terminology first, and of course I will show you right away where to place your orders and where to take your profit and where to close your position if the position goes against you. All right. So, and then of course this is a valid bearish divergent bar. The same is true here with this bullish divergent bar. All right? Again, do you see there is enough angle between the lines? But again, the simpler, the better way, I believe, to explain angulation is if there is enough empty space between your bullish divergent bar in this case and the ellipse. And of course, there is a lot of space. So this bar here qualifies as a valid bullish divergent bar. Very good. And we have the awesome oscillator. Shall I stop for a while and switch to the MT4 platform and try to identify a couple of bullish and bearish bars so you can understand better, I guess, the terminology. Okay, so how do you attach the alligator? First, you go to the indicators list, and then this system, this indicator, is located under the Bill Williams menu. So here you are, alligator is right here. You accept the default parameters. It's 5, 8, and 13. Shift is 358, and of course, smooth moving average, and it's applied on the median price, which is high plus low divided by 2. So you just accept the default. Now, do you see any bullish or bearish divergent bar? Look at that. I see one, of course, here. Do you see this one here? This one is higher, it's higher than the previous. Do you see that the closing price is below the midpoint, and there is enough space between the bearish divergent bar and the ellipse? And of course, it's out of the mouth. So this bearish divergent bar is okay to consider it. Is there another case where we can see perhaps a bullish divergent bar? What about this one here? What about this one here? Is it lower low? Of course, this low is lower than the previous one. And is this close above the midpoint of the bar? Yes, it is. Is there a lot of empty space between this bar and the ellipse, the green line? Yes. Is it out of the mouth? Yes. So this bar qualifies as a bullish divergent bar. Okay? Now, if I take this long candlestick here, it's higher high, it closes below the midpoint of the bar, but it's located on the other side of the alligator, right? So, and it's in the mouth nevertheless. So this one doesn't qualify, and we should ignore it. Okay, I believe you got the idea, guys. So let me move on a little bit. Okay. Then the next tool that I'm going to introduce, that is part, of course, of the alligator strategy, is the awesome oscillator. Awesome oscillator is something like MACD, but with different parameters, okay? It measures the momentum of the last 5 periods and compares that momentum with the momentum of the last 34 parameters, right? So it's a 5 and 34 the default periods, where in MACD, do you remember, it's 12 and 26, right? Now, the crossing of the zero line generates signal, all right? Like exactly the same with the MACD, the crossing of the zero line. And of course, it's a simple moving average, 5 periods minus simple moving average, 34 periods, very similar to MACD. So how does it look? It looks like that. This is your awesome oscillator. It's AO, the name that is shown on the oscillator window on the top left of your oscillator window. And of course, you see the histogram or the bars, the red and the green bars, that oscillate above and below the zero line. This is the zero line here. So actually, the way we're going to use it is that if the awesome oscillator is above the zero, then we assume that we are going up, and if awesome oscillator is below the zero line, we take it that we are going down. So we are going to use the awesome oscillator in this way to guide us on the chart, to make sure that we are on the correct side, on the right side of the chart. Above zero, we go up. Below zero, we go down. Very good. So yes, it's a buy signal, but we're going to rely on different signals to buy and sell. All right, fractals is another important part of the alligator strategy, and let me go through that as well. So up fractal, it's a minimum of 5 bars where the highest high is preceded by 2 lower highs and is followed by 2 lower highs. Guys, I know it sounds a bit confusing, but you know very well that I will make it very practical for you, so you never forget it, right? Okay, so look at that. Do you see my fingers here? Unmuted. So let me see, how can I put it like that? Like that, do you see? Do you see this middle finger, right? Yeah. So how many fingers? 5, right? Do you see that this middle finger is higher than the 2 to the left and is higher than the 2 to the right? This is what the up fractal is. 5 bars or candlesticks where the middle one is higher than all of them. Is that clear? Don't get confused, it's that easy. The middle bar is higher than the other 4 bars. Nothing else. Very good. Any question, guys? Is it clear now? A down fractal, it's very similar. It's a minimum of 5 bars where the lowest low is preceded by 2 higher lows and is followed by 2 lower lows. Again, this is a down fractal. Let me see. Doesn't look very straight, right? Okay, guys, look at that. Okay. Now I got it. So you see, this one is lower than all the other ones. All right? That's simple. Don't get confused with this terminology now and these complex definitions. This is very easy to understand. The middle bar is lower than all the others. Very good. We got that one as well. And let me see. We have a question here. Can MetaTrader 4 Android do the awesome oscillator? To be honest, I don't know, Akinola. Please check under Bill Williams and let me know as well. All right? Thank you. All right, up fractals. So they look like that. Do you see? The middle bar is higher than the other 4. Another example, the middle bar is higher than the other 2. We don't care about the relationship of the 2 to the left and 2 to the right. What we care about is that the middle is above everything else. You see, in this case, the middle bar is higher than the other 4. And again, here, the middle bar is higher than the other 4 bars. And of course, down fractal, very similar, but in this case, the middle bar or candlestick is lower than the other 4 candlesticks or bars. In this case, you see exactly the same. And in this case, the middle bar is lower. And in this case, the middle bar is lower than the other 4 candlesticks. We don't care, again, about the relationship between the other 4 bars. And this is how the fractals look on your chart. So you see these red triangles are the fractals. So for example, here you see this is the middle one, and of course it is higher than the 2 to the left, and this is the middle one, which is higher than the 2 to the right. In this case, it's the same. This is the middle one. Two to the right are lower, so the middle one is higher. And again, the middle one is higher than the two to the left. And of course, down fractals, we see here that this middle bar is lower than the two to the left and two to the right. This one is lower. That's why the fractal is here. You see, if somebody might say it's not really as they say, no, they are not the same. This is lower, okay? And of course, in this case here, it's obvious that this one is lower than two to the left and two to the right, and another down fractal example here. So I guess you get the picture, guys, right? Okay, let me just go to our chart, MT4, and attach fractals. So you can know how to attach fractals. You go again to the indicators list, and then of course you know that these tools are under Bill Williams, and you select fractals. You can change the color. The default is red. All right, so you attach like that, and all these small triangles correspond to fractals. So I want you to concentrate actually in this area here, the current price activity. Okay, guys? Because this is what we are interested in. Whether there is a buy or sell opportunity, right? Excellent. Now, let me go back now to our presentation. Look at that. Wait, wrong here. Okay, buy signal above the alligator's teeth. Buy signal above the alligator's teeth, the red line. Okay, so you can buy when there is a buy signal above the alligator teeth. The teeth is the red line, right? Okay, and here there is an example where there is an up fractal. Actually, it's the first up fractal after the downtrend, right? Do you see this downtrend here? And this is the first time you get an up fractal that is out of the mouth. And you can buy where? You can buy right here at this candlestick that goes right above the middle bar of the fractal. So right here, you are allowed to buy. Okay? So you use the fractals to enter in the market as long, in this case, a buy signal is above the red line, and may I add above the mouth. Okay? So it's a breakout. This buy signal is called a breakout. Very good. Let me show you a sell signal. In this case, we have an uptrend, and then you get this first fractal that's outside of the mouth, and you can sell right here when the price goes below the fractal, right here. Okay, guys? All right. So you're going to sell here, right here. So let me find, I have a question. Do the awesome oscillator. Oh, please re-explain the buy signal again. Okay, I will explain it again. Let me go back then. Buy signal. Do you see this up fractal? Do you all agree that this is an up fractal, right? Okay, guys? You see, this is the middle bar that's higher than the two to the left and two to the right. This one is higher than the four bars. So this fractal is above the red line, right? It's above the red line, all right? So when the next price goes above the fractal, then you can buy. And this is what we did here, we bought. And of course, Mr. John Fruit Burns, this is a different strategy than the bullish and bearish divergent bar. I haven't explained how to get in using the bullish and bearish divergent bars yet. I'm just explaining now the terminology. And now I'm using the terms that we learned so we can enter the market. And of course, we are using the fractals to enter the market. I will explain in a while the entry with the bullish and bearish divergent bars as well. Now, so we know how to buy. And then when you see a down fractal in this case, below the mouth, and you can enter here with a short position. Is it clear? Okay. All right. Very good. Stop loss. Bullish divergent bar. Let's identify first a bullish, or perhaps before I move here, I will go to MT4. Let me go to MT4. All right, guys, look at that. Do you see any opportunity in this area of my price chart? Do you see any opportunity? Perhaps this one here is a down fractal, right? This one is a down fractal. Do you agree with me? Is it below the red line? Yes, it is. Is the price to enter short below even the jaw? So to do that, perhaps I can come here and draw my line. Do you see that here is the entry point that corresponds to this down fractal, which is even below the jaw, right? So am I allowed to short here? Please, guys, type yes or no if I am allowed to short here. All right? Okay. Can I give you one more tip? Are these smooth offsets? Do you see these three lines pointing up, sideways, or downwards? So you see they are pointing downwards. That implies, based on this theory, that most probably the market will move lower. So you see you have a lot of confirmations. You have your down fractal here out of the mouth, right? Right after a long uptrend. So this is a reversal, right? Then your offset imply, confirm that you are going down, and then you are taking this short position completely out of the mouth, right? Is it good? I think it looks very good, right? So let's see if we can find another long, perhaps, where we can buy. So do you see this long downtrend here? Prolonged downtrend here. Do you see here this up fractal? Can I buy here? Guys, please type yes or no. Can I buy here? Do you see this up fractal? And then this price going above this top. Can I buy? Of course not. I cannot buy because this fractal has to be above the red line because I'm going to buy, and my price where I'm going to enter with a long position has to be above, outside preferably, of the mouth. Okay, so let me see if I can find a nice buy signal. Is this a nice buy entry, guys? Do you see an up fractal? Prices go above this middle bar. Is it above the red line? Of course, this up fractal is above the red line. Is my price out of the mouth? Of course. Are the smooth offsets pointing upwards? Yes. So go with it, right? And let me add another confirmation. In this case, it's going to be our friend Awesome Oscillator. So in this case, you can take this Awesome Oscillator, right? Right on this bar where I want to buy. Is it below zero or above zero? It's above zero. So Awesome Oscillator says, go buy. Fractal says, go buy. Offsets say, go buy. So I feel more confident to buy now. So I have different confirmations. Okay, guys? Very good. Excellent. So since we are here, and I see a very beautiful bearish divergent bar, let me just show you how to trade it. Do you see this bar here, guys? Do you see this bar? Is it a bearish divergent bar? Please type yes or no. Is it a bearish divergent bar? Yes. Why? Because first of all, it's higher than the previous high. First condition. Second condition, closes at the lower half of the bar. Is that true? Absolutely true. Is there a lot of empty space between this bearish divergent bar and the green line, the ellipse? Yes, plenty of it. So is it a valid bearish divergent bar? Of course it is. So can I trade it? I think you can trade it, but this time awesome oscillator, and I will put it there on purpose, will not confirm. Why will not confirm? It will not confirm. Why? Because you are doing a contrarian trade. You are going against the trade. So awesome oscillator actually is going to be above zero while you want to go short. It's contrarian. You go against the trend. So all the time, awesome will not confirm. That's why you cannot use it. You are not allowed actually to use awesome oscillator on the bearish or bullish divergent bar. Okay, very good. So I'm sure you got the point. So you sell right here. So when the next candlestick or bar opens and it goes below this low, you sell. Where is your stop loss? Your stop loss is at the high of this bearish divergent bar. So your stop loss is going to be here. Is it clear, guys? Where do you enter short? You enter short right here. Clear? So you know in advance you are risking ticks, right? You can measure it very easily. Where is your profit? A lot of ways to calculate your profit target. One is to close when you close below the green ellipse, the green line, right? Another way, it depends how aggressive or conservative trader you are, right, guys? Or the other way is when you close below the red line. Another way is below the blue line. It depends on you. It's subjective. All right. And another way is, of course, to close part of your position at different levels. So there is plenty of flexibility on this system. Okay. I have a question. What do you use for confirmation here? Okay, the confirmation that you have here is that there was a prevailed trend, and then you get a nice divergent bar with plenty of empty space. So if you see, is this an upward move? Yes, it's a beautiful upward move. Is this going to be a correction or a reversal? Nobody will know, of course, but it looks like we're going to have a correction or a reversal. So that's why here you have to be a little bit, I don't want to say conservative side, because you are going contrarian. Don't forget that you're not going with the trend. You go against the trend. So perhaps you should be a little bit defensive and start taking your profit. Perhaps when you achieve 100% of your risk, perhaps when you reach one of these lines, start closing part or all of your position. Okay, guys, is that good? Fibonacci strategy to take profit. You mean to take Fibonacci on this bar? Do you think so? Let me try. So do you do it like that? So you want to take where? 161.8 and where? 261. Look, I prefer to. You can use 161.8. Decide how much of your position you want to close there, and then of course incorporate these three lines in your take profit strategy. Okay, it's up to you. You can have, it's very flexible, the take profit. Okay, all right, let me go back to the presentation and see how we are doing here. And let me check the time as well. I think we're doing very well. Did I answer all the questions, by the way? I have more? Well, I don't see more. Don't have more questions. I answered Fibonacci, right? Before. But you can use AO to show divergence by looking if the peaks are correlated to what the candles are showing. Adrian, Philip, Nomdi. All right, Mr. Adrian. We have more questions? Where is it? Below. In using Fibonacci strategy for the moving strategy, moving average is used in trend following system, and oscillator is used in mean reversion systems. Okay, we're getting a lot of scientifically technical here, guys. All right, look, I don't want to complicate things, guys. Divergence, Dr. Bill Williams addresses the tops of the and the bottoms, of course, of the awesome oscillator to identify, if you like, wave number 3 and wave number 4 that corresponds to the Elliott wave theory. Okay, I don't want to complicate that, and I don't want to start explaining now divergence, bullish, bearish, and hidden divergence. I think it's not needed. Okay, what I'm explaining here is very practical, and if you concentrate on the bullish and bearish divergence after a prolonged trend, and then if there is enough space between that bar and the lips, so we can bypass the difficult explanation of the term angulation, then you are fine, I believe. Okay, regarding the oscillator that Mr. Nasser mentioned here, look, if you know my teachings, guys, I don't rely on any indicators or oscillators. Price is the boss, and that there's no discussion about that. Only price is the leading indicator. Okay, so oscillators and indicators are there to help us, especially beginners, especially people who lost their confidence, who want more confirmation, right? And when they are not sure about the setup that they look in front of them on the chart. As a matter of fact, oscillators work good during a range, right? All right. So now that we clarify that, I want to keep things very simple, guys. All right? Excellent. So stop loss. Bullish divergent bar. So is this a valid bullish divergent bar? Is it? Well, is it a lower low here? Of course there's a lower low. Is there enough space, empty space between the, how you call it, the bullish divergent bar and the first line here? Yes, there is, right? So this one qualifies for a bullish divergent bar. So I buy here and I place my stop loss at the low of this bullish divergent bar. Is that good? Okay, another question. Can it be said that this system uses strengths of both systems? Which systems? Strengths of which system, Mr. Nasser? Please clarify that so I can answer, please. The strengths of both systems. Which systems do you mean? Okay, I will come back to that when I get this clarification, please. All right, so stop loss. Here you have a bearish divergent bar. Is that a bearish divergent bar? Yes, this is a bearish divergent bar. Why? Higher high closes at the lower half of the bar. Is there plenty space between this and the mouth? Yes, there's a lot of space, right? So I sell here when the next bar goes lower than the low of this bar, and I place my stop loss at the top. Clear? Take profit. Let's talk about something very pleasant. right? Take profit. So where do you take your profit? Close below the lips. Do you agree that I can buy here, guys? Do you see? Can I buy here? Is this an up fractal? Can I buy here, right? Where do I get my trend, my profit? So I can take my profit when I see a close right here, perhaps. Is it a close below the lips? Is it marginal here? Let me see. Right here. This is a clear 100% close below the lips, right? So I can take my profit here if I am a little bit on my conservative side. If you want to be a little bit more aggressive, perhaps you can say I want to take to find a close below the red, and so on. But I think I prefer this close below the lips, below the green line in this case, because I had a lot of profit, right? So take profit. I sell here, right? I sell here, bearish divergent bar. And of course, do you see here? I can take all my profit when I get close above the lips. Also, you can take profit when you touch here the lips. It's up to you guys. It's up to you. But when you have a nice trend, then you use the lips, right? It depends whether it's going to be a correction that you never know in advance what's going to be, or a reversal. Okay. Sleeping alligator, strength of both trend following system and mean reversion system. Yes, you are right, Mr. Nath. Yes. All right, very good. And alligator is sleeping in this case, and you stay out. What does it mean, alligator is sleeping? It means that the three lines look like spaghetti, guys. It looks like spaghetti. Yes, they are mixed up. There's no direction. They are not opening and going up. They are not opening and going down. They are mixed up like a spaghetti, like in this case here. So here the alligator is sleeping, and it's not a good opportunity to take any of these fractals to buy or sell. The same is true here, in this case here. Alligator is sleeping. You stay out of the market. It's a range, right? And you know exactly what I say about the range. We stay out of the market. Okay. So we stay out of the market. And then after the alligator was sleeping for a while, do you see? Do you see the spaghetti, the three lines, how they are intermixed, right? Then the alligator might wake up. How do you know that the alligator wakes up? When the three lines open up, right? Do you see? The lips, the teeth, and the jaw, they open up and they follow a downward direction in this case. And after a long sleep, the alligator is very hungry, and the alligator wants a lot of tips, right? And on the way down, it's going in a very nice fall, a very nice downturn. And here, of course, it's a very good place to be in the market during a trend, guys. Nothing difficult. When the alligator is hungry, it means that there is a trend. And extended offset, of course. This is the offset that I explained in the beginning, that these three lines project the future, if you like. They move forward, all right? And if these three lines going downwards, it implies that most probably the alligator will continue to move lower. If these three lines move upwards, it implies that most probably we're going up. If they are intertwined and mixed up like a spaghetti, then most probably we're going sideways. Okay? This is exactly the help that you get from the offset. Like in this case, even though here you have a sideways movement, do you see that this breakout here, do you see this guy here, actually it's an up fractal, guys. Do you see this middle bar is higher than the two bars to the left and to the two bars to the right? And is it a good idea to buy if the next candle breaks above? What do you think? You have to go and check your awesome oscillator perhaps, and you have to see what these guys are saying. So these guys are saying we are going up. So they confirm your decision to buy. And then, of course, you can see what your awesome oscillator. If awesome oscillator says go ahead and buy, then you feel more confident to take this trade. If one of them is not confirming, perhaps you can enter with less money to reduce your risk if you are not sure about these opportunities. Can you please explain more about the up fractals by signal? I see a candle closed above the green line of the down trend. Please, sir, can you explain again how do you use the alligator? How you close your trade? I mean, how to insert the alligator? All right. So let me see. Okay, let's go on and see if we have anything left. So in this case, you see that the alligator is sleeping because the lines, the lips, the teeth, and the jaw are mixed up like a spaghetti, and you see they don't point anywhere. The offset doesn't give you any direction, so you cannot trade. You stay out. It's better that you stay out of this market, right? And of course, let's switch back to our MT4 and practice a bit. All right, let's practice a bit, and let's start from the beginning then. All right, let me remove everything, and then I will start attaching them one by one to help our friend. All right, shall I stay on euro dollar, or do you want me to use any other instrument, guys? Please type the currency pair that you want me to use for the example, and the time frame. Currency pair and the time frame. USD JPY, guys. It's given. USD JPY. It's here. What time frame? 30 minutes. Guys. Wait. USD JPY on the daily time frame. Right? Wow, this is beautiful. Let me take it step by step. Beautiful. So how do you attach the alligator? You click here on the indicators list, and then you go to Bill Williams, because all these tools that I have been discussing today are developed by Dr. Bill Williams. And then under Bill Williams, you choose the alligator. The default parameters are 5, 3 for the lips, 8, 5 for the teeth, and 13 and 8 for the jaw. Okay, and now here you are, the 3 lines that make up what's known as the alligator. Now you want to attach the fractals so you can identify any buy or sell opportunities. So you go again to Bill Williams and you choose fractals. You accept, of course, okay, again, the default. Now, do you see here that we have a downtrend? Isn't it obvious that it's a downtrend? If it's not that obvious, then go again to Bill Williams and use the awesome oscillator. The awesome oscillator doesn't allow you to change the parameters, by the way. The default parameters is simple moving average 5 minus simple moving average 34, okay? But you don't have the, you're not allowed to change them, all right? Now, since the awesome oscillator is below the 0 line, and as one of our colleagues here suggested that there was a divergence, like in this case here, do you see the divergence here? For those of you who are familiar with the divergence, okay, it means that it implies better that this downtrend is coming to an end, right? Of course, I don't want to spend more time on the divergence today, but it's because it was mentioned, I get this opportunity to explain it now. So this is a divergence, and I can go one step further, guys, for those of you who are familiar with Elliott wave theory, and say that the longest, the deepest low on the awesome oscillator corresponds to the third wave. So this here is the third wave. And after the third wave, when the bars go above zero, correspond to the fourth wave. And after the fourth wave, of course, what do you get? You get the fifth wave. And of course, it's a divergent, a bullish divergence. And now I feel good because if I find an up fractal, right, I will take it because I believe that the prices will go higher after a downtrend, right? So is this a nice fractal? Yes, but I don't get the entry. Is here a nice fractal? Here. Do you see, guys? Here. Yes, it's a nice fractal, but I don't like this congestion. Do you see the congestion area? Do you see that the lines are interconnected, interlinked, interrelated? So I am not allowed to enter there. Okay? I'm not allowed. And then, what about this one? Do you see this one here? Is it good? So let me see. Is this here nice? It's nice, but it's not above the red line, right? So I'm not going to take it. What about this one now? This up fractal here. Is this up fractal here nice? It's nice. What about the three lines? Do they show up? Yes, they show up. So they confirm, right? Is my oscillator, awesome oscillator, going up? Yes, it's above zero. So it says go ahead. So I can go ahead and buy here. Okay? Now, let's find another one. So the next one was USD GBPY 30 minutes. GBPY 30 minutes. All right, here we are. So we are right here. Very good. Is this a bullish divergent bar? Yes. Can I buy here? Of course. Can I place my stop loss here? Of course. And I go up, I enjoy my profits. Right? It's clear? Of course, awesome oscillator, when you talk about bullish and bearish divergent bars, it's always on the other side. So you don't really look at the awesome oscillator when you're going to take an entry based on bullish and bearish divergent bar. Okay, what about this one here? Is this a bullish divergent bar? Yes, it is. Is it lower low? Of course. Is the close above the midpoint of the bar? Yes. Is there a lot of empty space? Yes. Is the awesome oscillator below zero? Of course, it's always below zero in this case. So can I buy here, guys? Can I buy here? Of course, you can buy here. And where is my stop loss? Don't forget your stop loss to protect your money. It's right here. So I buy here. I come at the lips. Perhaps I close part of my position. I go higher, perhaps I close another part of my position. I go higher, perhaps I close another part of my position. Or I can use, as one of our friends suggested, Fibonacci on this bar, and I can do whatever I want. Okay? Don't forget your stop loss, and don't forget to start taking some money when the money is there, right? Don't forget that you go against the trend. Now, we have, what is that? GBP USD daily. Am I running out of time, by the way, guys? I still have 2 more minutes. This is what my colleague here is waving at me. 2 more minutes. All right, guys. Let's see. GBP USD. GBP USD is right here. What is the time frame? Daily time frame. Daily time frame. Very good. So what do you have here? Is there any trade here? Not yet. You see, there is no trade here. But what about this guy here? Is this a bearish divergent bar? What do you think? Is it a higher high? Yes, it's a higher high. Is the close below the midpoint of the bar? Of course. Is there an empty space? Oh, plenty of empty space. Can I sell here? Right here. What do you think? Of course. Okay, you got the point, guys. All right. And can I place my stop loss right here? Of course, you can put there. and I sell here, prices go down, and I am in profit. All right. What do you do when you get different signals on different time frames? Why do you want to look at different time frames and get different signals? Why don't you stick to one time frame and get one clear signal? Okay? There's no reason. And I explained it many times when I am on location in your countries and I discuss Elliott wave theories to explain the system that I present on location in your own countries, guys, that it's a nice theory to look at the different time frames, but it gets you very confused and it's not really needed. Okay? Nevertheless, do I have any other? Thank you for the wonderful Samantha strategy you gave us in Johannesburg 2 weeks back. Yeah, very good. Thank you. What is the best time frame to use this strategy? Look, it's up to you. As I explained a lot of times, there is no best time frame. If you go on a very low time frame, I can go to 1 minute if you like. Let me just, you see, they all look the same. It doesn't really make any difference. If you don't, if I can hide here the time frame, you cannot really tell whether this is a 1 minute or 1 week time frame. The problem sometimes with low time frames is that there is a lot of more noise, if you like. There's more noise. But it's a beautiful up fractal here. Do you see it? So I can buy right here. It's above the red line. Do you see? The up fractal is here. My stop loss, I can place my stop loss here, right? Can I place my stop loss here? Of course. All right, I buy here and I am in profit. So the 3 lines show upwards, even though my OSAM is pointing below 0. So one of them is confirming, the other one is not confirming. It's up to you what you're going to do. Some of you might not take the trade. Some of you will take it as long as one of the two confirm. In this case, the 3 moving averages pointing upwards confirm, but the OSAM does not confirm. So as long as one of them confirms, say, I will take it. All right. And of course, those of you who know the Samantha setup, it's a beautiful Samantha setup, guys, here. Do you see it? Excellent. And of course, this is the result. So it's up to you how conservative or aggressive trader you are. We have more questions. Is it good to use a trailing stop? You can use a trailing stop. You can use anything, guys. My research shows that if you use a trailing stop loss, especially in the beginning of the trade, it's going to kick you out, and then the market will continue in the other direction. So I'm not really enthusiastic about the trailing stop, especially in the beginning of the trade. If you use a trailing stop to secure your profit, then it's different. But let the market move, give it space to breathe, and then start using these trailing stops. Okay, guys? Anything else? I have more questions. Wait, I lost my arrow. Oh, here it is. Yeah. I don't have any other question. Where? Is it good to use trailing stop? This is the last question, right? Before that, about the ultimate. Can we use this strategy with the ultimate formula? Who is this guy? Alinosa? No. Don't touch the ultimate trading formula. All right? It's either take it or leave it. All right, guys? Anything else? Another question? Is it wise to use both indicators at once? Which indicators? Alligator and ultimate? If this is a question, the answer is no. Don't alter the ultimate trading formula. You have to decide what you want to use. Okay? All right, guys? So it seems that you understood very well the alligator trading strategy. All right. And I hope you enjoyed it. Next week, I will be in Kuala Lumpur for seminar and workshops. I'm going to introduce Samantha to our friends in Kuala Lumpur in Malaysia. So if you are from Malaysia, I would be very happy to see you there and discuss strategies and anything that you want to discuss with me. And then when I come back, in 2 weeks, most probably, we're going to have another webinar. So please stay tuned. Look at our website. You will receive emails, of course, for our next upcoming webinar live as always. Thank you for watching. See you soon.